Good morning, traders and investors. My name is Roger Scott. Today is Friday. It is March 26th. Wow, today is this is the last trading day? No, it's not the last trading day of March, but we're almost in the last trading day of March. And it's been over a year since the pandemic has started. And boy, oh boy, it looks like things are starting to pop back up. But it's going to be a rough ride, a real rough ride, just like I told you it would be. We've got two employment numbers come out. We got international trades today, and it looks like the deficit is widening. They're looking for it to widen to 86.1 billion. Prior was 83.7 billion, and look at the consensus. It can widen all the way to 89.4 million. I'm hoping that the number is going to go lower to 83, 84, and not go as high as 89, because if it does, it's just going to tell us that the U.S. goods deficit is widening it. And widening deficit is not a good thing. The other report we have, and this is a big one, we have personal income report. This is a monthly report. Now, employment numbers finally started breaking below 700,000. We saw that yesterday. We had a 10% gain in personal income last month, but this month, it looks like personal income is expected to plunge, a comparison distorted 7.2% in February versus January's giant 10% surge. So we're looking at 7.2% plunge. If the number is better than 7.2, if it's lower than, if it's like 5% or 3% or positive, it would be really, really good. But it looks like we're going to go back negative the other way. Personal income expenditures also jumped in January, up 2.4%. We're looking with minus 0.7% for February. So let's see if consumption is higher or better than negative 0.7, and let's see if personal income is better than negative 7.2. I got to tell you honestly, the expectations are not that high. I don't think it's going to be very hard to get past this, and we'll know in about 27 minutes or so. Looking at the futures, we're not opening for another hour and 27 minutes. I usually do this before the opening bell to give you guys a really good idea of what to expect throughout the session. NASDAQ is weaker again. We're seeing a pretty good bounce on the Dow. It's up over 100 points, which means it's meaningful. The Russell's up 14 points. The S&P's up 8 points for what it's worth. But the NASDAQ is down 44 points. And if you look at the chart of the QQQ, which is already reflecting it in the price right here, it being down 0.40, it's below the symmetrical triangle we're seeing here. It broke down as I expected that it would, and it looks like it's going lower. Now, if you look at the S&P 500, you will see that the S&P 500 is also, let me remove this bar here. As you can see here, it's trading within the 50-day moving average or above the 50-day moving average, and now it's there for not one session. We haven't had a full session. We had a couple of sessions when it was above, but now we had a breach. So we now have to have 2 days of complete clearance above the 50-day moving average. The Russell is not faring so well. It is now breaching the 50-day moving average. And if we look down here, we are over sold, and I think we're going to bounce. I'd like to see us bounce above, but till the NASDAQ gets some clearance, it's going to be negative for speculative stocks. And it looks like the NASDAQ 100 is pulling everything with it. Now, if you look at the percentage of stocks, now this is the number of stocks in the entire market. Any stock that's priced over $2. So this gives you a very broad perspective of the stock market. And it's telling us that right now only 53% of stocks in the entire stock market, all stocks trading above $2, are trading above the 50-day moving average. 53%. If you look at the NASDAQ, you will see that only 40%, or 40 out of 100 stocks, are trading above the 50-day moving average. And I think this number, as I said earlier this year, or a month or so ago, when we were up here and up here, I said this number can go lower till about 20th or maybe even 10% out, because we need a major shakeout. So, and I'm going to tell you something. Look at the long term. That's the 50-day moving average. Look at the 200-day moving average. I want you guys to see this. It's not happiness, what you're going to see right now. If you look at the 20-year line, we're just here. We still have 70% of stocks, 72 out of 100 stocks trading above the 200-day moving average. And I think that number has to come down to about 40th, 50th percentile, maybe even 20th percentile, which would put us way below the 200-day moving average. We need a shakeout. You guys notice anytime we come up here really, really high over the last 20 years, we come down, we come down, we come down. Look, lower, high, low, high, low, high, low, high, low, high, low, and high. And I'm going to tell you, it's going to come down to the low. We need a good shakeout before the market comes up again. Very, very, very important. If we don't have a shakeout, it's going to be hard for the market to continue going up. Imagine a rubber band that's stretched out. Meanwhile, keep your eye on the international trade in goods number. This is a really important number. Keep your eye on the personal income number. And most importantly, keep your eye on the price action of the QQQ over the near term, because the QQQ is right now having the biggest impact on the market. And notice it's below, it's in the twilight zone, which is between the 50-day and the 200-day moving average. Now, if you look at the bond market, that's having the biggest impact on the NASDAQ right now, and the bonds are breaking lower. So it looks to me like we're going to go a little bit lower in the bonds, which will make interest rates higher, which will put more pressure on the tech and the speculative stocks, which make up the NASDAQ 100, because those have the most volatility and the most risk-adjusted returns. So we need to see if at the end of the year they're going to show us earnings per share that will strongly outweigh the yield that we're going to get from the bond market. And it looks like if we go lower, we're going to hit 2% sooner than later. Now, I've got 2 ETFs for you today that are doing really, really well. I mean, really well, and a stock that's doing well. So let's talk about ETFs. First, we've got the Wisdom Tree Japan Hedged Equity Fund, ticker symbol DXJ. It's right here. It made a 4-day low, or it made a swing high, 90-day high, swing high. And if you look here, you'll see that it's breaking above right now the highest level since 2018. So this is now a 3-year high. It's trading at a 3-year high. I like this. Remember what I told you? Global economies are going to rise with the Biden administration. Democratic government is good for global economy. So we're seeing more global economy rising. We're seeing the Japanese hedged equity fund rise. Japan's economy is actually not doing so bad. It looks like it's going to go higher. I would put a buy stop around 61.50 and liquidate it around the 59.90 level. And profit would be about 2 times risk. Next, we got Canada. Canada iShares. Look at that. Let's look at a 5-year chart. Look at that. Highest level in 5 years. Highest level in, look at that. Highest level since 2011. Multi-year high. Multi-year high. Broke out, making a pullback. Not at the 50-day moving average. Grossly outperforming most stocks indices right now. Canada and Japan. Can you imagine? Canada and Japan is where you want to put your money right now. But I've got a stock for you too. And this is a stock I've been talking about for a long time. It's DraftKings, ticker symbol DKNG. It's having a really nice pullback to the 50-day moving average. And if you look at the stock over the last, not 3 years, but let's say 2 years, you'll see it's been going up. And gambling is getting legalized in the U.S. Sports betting. This stock is hitting the 50-day moving average. It may be a good time to buy it at the 66.80 level. And if it breaks below the 50-day line, just get out of it. But I like the fact that it's holding on above the 50-day moving average, even though it is a smaller stock. It's a $26 billion stock, but it's holding on well. Look at this 1-year return, 406%. And it's one of my favorite stocks. So I like the pullback. I like that it's already trading here a little higher. Again, I would wait for a pullback above the $67, $66.80 level right here. And if it breaks the low, I would get out of it. Now, folks, I know it's Friday, but I've got something really, really important for you. Folks, I'm breaking the code of silence. That's right. I'm really breaking the code of silence. I'm finally revealing a hidden formula that Wall Street insiders used in secret to bank billions for over 91 years. I'm breaking the code of silence. You can't stop me now. The formula is so potent that Vanguard founder, and creator of the very first index fund. This is big stuff, folks. Jack Bogle, I mean, you got to check this out. He calls it the law of gravity in the stock market. I'm not kidding. And I'm finally ready to spill the beans. Not Jack, I'm getting carried away here. Jason Swig of the Wall Street Journal said it's the most powerful law. So one guy says it's the most powerful law. Other guy says a law of gravity in the stock market. Folks, this is really big stuff. And over the past few years, I've used it to help a small group of traders gain 21.7% return in 2 weeks, 55.5% return in 2 weeks. How about 78.7% return in 2 weeks? Not enough for you? Well, how about 189.08% return or higher in just 2 weeks? Folks, I'm literally breaking the code of silence. Click on the link below and see how anyone can potentially use this breakthrough strategy to profit gains like 189% in 2 weeks. Folks, when somebody like Jack Bogle talks about it being a law of gravity in the stock market, or Jason Zwick says the Wall Street Journal it's the most powerful law, I mean, this is big stuff. Gains like 189% plus in 2 weeks. You've got to get in on this. Click on the link below and see how anyone can potentially use this to make money on Wall Street today, right now in this type of economy. Folks, I'm breaking my code of silence. Now, folks, make sure follow the link, and also make sure to like this video if you're watching on YouTube. Be the first to be notified when we post new videos. Follow the link, subscribe to our channel, and I'll talk to you soon. Most importantly, have a great weekend. Bye, everyone. And post some comments. I need comments from you guys. Bye, everyone.